Hi, this is Courage from Trading with Tan. In this video, I'm going to show you a simple scalping strategy that can be very profitable if you trade it exactly as I'm going to show you in this video. So the idea of scalping is just trying to catch a small move in the market, right? So you can catch either an impulsive move or you can catch a pullback, right? So as a scalper, you can try to catch this move right here, or you can just try to catch this small move right here. Maybe you can make money with a small move, right? So you can make money from maybe from this point right here to this point right here, or you can try to catch all this move right here, which is two different things that you can do in the market, right? So before we move forward, I want to let you understand that this strategy can work on your phone, on your computer, anywhere you do. But if you're using a phone, make sure you put your phone on landscape mode so you can see a bigger move of the market. So let me show you how the strategy works, how you enter into the market, and how do you make your profits. So with this strategy, we are going to try to find when the impulsive move is really stretched out, and we are going to try to catch this small pullback right here. So after a long move, right, if you get an impulsive move which moves like this, right, what we are trying to get is just trying to catch a small move maybe from this to this here. These small pullbacks that happens after each and every impulsive move is what we are going to try to catch with this strategy. So how do we know when the impulsive move is about to end? So to do that, I think the simplest way is to use the Bollinger Bands indicator. If you want to start using the TradingView platform, I will leave the link in the description. I use TradingView for market analysis, and then I use my MetaTrader to enter into the market. So I'm gonna just come here on indicators, and I'm gonna search for Bollinger Bands. So if I search for Bollinger Bands here, you're going to see that I'm gonna have the Bollinger Bands on my charts right here. So as you can see right here, we have the Bollinger Bands. So how does the Bollinger Bands help us to see when the market is about to end, right? So if you look at this market right here, if you go back with this market, you're going to see that the market will spend 90% of the time inside these Bollinger Bands right here. The market will spend all of this time inside this Bollinger Bands. So when the market comes out of the Bollinger Bands, either on the middle, on the lower band, or on the higher band, we know that this market have overstretched and it might likely come back into the Bollinger Bands right here. So for example here, if you look at this, you are going to see that the market moved all the way outside the Bollinger Bands right here, and then it closed down and came back into the bands. If you look on the downside right here, we can see that the market moved outside the Bollinger Bands, then it came back inside the Bollinger Bands right here. So the Bollinger Bands is what gonna help us to determine when the move is overstretched. If the impulsive move is overstretched, it's gonna come outside the Bollinger Bands, and then we are going to see a pullback when the market comes inside the Bollinger Bands right here. So if you haven't used the Bollinger Bands, the Bollinger Bands is a simple indicator right here. So on this Bollinger Bands here, the middle line of the Bollinger Bands is called the 20 symbol moving average. So this is the 20 period symbol moving average, and then the upper side and the lower side of the bands is the 20 period moving average but put on a 2 period deviation. So when the market comes outside the Bollinger Bands right here, there's more likely scenario that the market is gonna come inside the bands right here. If I do this, you're going to see the market is gonna come inside the bands and go to the upside right here, because the market will spend almost all the time inside the Bollinger Bands. So we are going to try to see if the market is overstretched outside the band, and then you're just trying to get a small move that comes inside the band. But there's a problem here. On this exact example, you can see that the market came outside the bands and it came inside the bands but didn't move to the upside right here. It continued moving to the downside. So how do we avoid scenarios like this? Because if we just come here and say, okay, most traders believe that if the market comes outside the bands, we just sell expecting prices to drop. If it comes outside the band, sell expecting to drop. If it comes on the downside, we buy expecting the market to move up, right? Which is very common, and it happens a lot of the time. As you can see here, we don't even need to backtest this. You're going to see that almost every time when the market comes outside the bands, is gonna reverse to the other side. But there are other times when the market comes outside the band, it reverses up, it doesn't go back to the middle band, just like on this point right here. So how do we make this a little bit better? What we can do here is we need to add another indicator. So we go to trading view, indicators, and then you are going to type in MACD, which is the moving average convergence divergence, right? With the MACD is the moving average convergence divergence, which is, some other people call it the MACD. So the MACD is down here, right? If you look at the MACD, this is how the MACD works. The MACD have three different things. The first one is the histogram right here. If you can see here, we have what is called the histogram, and also we have these lines here. The blue line here is called a MACD line. Right, so this is the MACD line right here, and then this other line here is called the signal line. So the way that most people trade this is they say, okay, if the MACD cross over just like this right here, you are going to sell at the main chart here, expecting prices to drop as the MACD crosses, right? So if the MACD crosses to the upside, you were going to be looking to buy, right? So just like at this point right here, if the MACD crosses right here, you were looking to buy here, expecting to prices to go up. But using this MACD just like that, sometimes it's not very effective, because the MACD on its own cannot make you profits, but you need to combine it with other indicators. So in this strategy, we are going to combine the MACD and the Bollinger Bands, right? So now combining the MACD and the Bollinger Bands, on the MACD, what we are going to be needing right here is only the histogram right here. So the histogram is going to show you who is in control, the momentum of the market. If the MACD is like this, and then you can see the histogram going up, it simply means that there is more momentum in the market at that point right here. And also, if the MACD histogram is moving to the downside right here with a strong momentum, it shows you that there have been momentum in that market for that certain period of time. Now for this strategy, this scalping strategy, what we are going to do here is we are going to remove the signal lines of the MACD. We only need the histogram. So what I'm going to do here is just go to the MACD line and put it in white, and also going to the signal line, and I'm gonna put it in white just like this, and then I'm gonna put this one in white, so that at this point right here we cannot see the MACD line. We now only have what is called the histogram, and also we have the prices, and I'm going to show you how to buy and how to sell using this strategy. Now to buy and sell using this strategy, here's what you need to do. Number one, you want to see something called divergence, right? So what is divergence, right? First of all, we want to buy or sell when the market moves, stretches outside the bands, and then pulls back into the market. So we want to sell at this point right here, sell here, and then we make the profits. On the other side, we want to buy when the market comes outside the band right here. We want to buy, and then we expect prices to move to reverse right there. But we want to combine this with what is called the divergence, right? So there are two types of divergence. The first one is called the hidden divergence, and then the other one is called the positive divergence, right? So here's what divergence works. So with divergence, here's what you look for. Let's say you are looking into the market and the market is moving just like this, right? And then you see that the market, you've gone outside the bands right here, right? And you want to sell, but before you sell, what you want to do here is you want to take your drawing tool or your trend line tool, and then you want to mark out here and see if this trend line is going up, because this is a higher high, this one is a higher high, and then if you look at the MACD here, you can see that this one is a lower low right there. So if we use the drawing tool right here, you can see that the MACD is looking like this and the trend line is going up. I'm just gonna put this in red so that you can really see it. So the trend line is going up right here, right? And then if we come here to look in on the MACD, you are going to see that there is shift in momentum right here. As I said before, this histogram here shows you momentum. So if this bar is bigger, there was bigger momentum here of buyers because the market was going up. and then on this side right here you can see the momentum is low, but the market is still trying to go up at this point right here. So when you see this, you know that the market is now likely to reverse. So you want to see the market going above the band, but once it goes above the band, you want to see the market, okay, the trend line was going up and on the MACD is going to the downside. That what is called the divergence. And then once you see that, all you have to do here, you say right here, you put your stop loss above this line here, and then you put your take profit on the middle band. It can be 1-to-1. The take profit might be smaller than the stop loss, but remember, this is a scalping strategy. All you are looking for is to get a small move and then you make your profits. So in this case right here, let's see if you're going to make profits, right? With one candle you would get your profits. That's why I said this is a scalping strategy, because your take profits are going to be very close to your entries and you're going to make your profits as fast as possible. Let me show you another example how it works and how are you going to buy or sell it. So looking at this chart right here, you can see that the market have moved below the lower band, right? So this is the lower band and the market have moved below the lower band. The first point is right here. You see the market moves here and now it moves be in the lower band. So once the market moves in the lower band, we are looking to buy, but we cannot just buy simply because the market is below the lower band. We want to see divergence so that we can confirm that this market is about to reverse. So how do we find divergence? We mark this previous lowest point right there, this previous lower low here to this lower low right here. Right, if you see this, you can see this line is going down right here. Let me put this in blue since this is a buy trade. See this in blue, and then we are going to see that on the MACD, if I do this, right, if I come to the MACD right here, and if I do this, you can see that this market is moving now into the upside, right? So comparing this line right here to this line right here, you can see that this market is now moving up. So since this market have shifted momentum, since this line is smaller than this line, we are expecting prices to come back into the upper band, right? So what do we do here? We wait for the first candle that closes inside the band before we buy, right? So let's see what happens next. What happens next is you can see there is this green candle here which closes now inside the band. If you look at this, you can see that this green candle have now closed inside the band. Also on the market, you can see that the color have changed right here. This is gonna be coming by default. You don't set these colors, they are gonna come like this. The colors have changed here, showing you that the momentum is now shifting to buyers right here. So once you see this, there is divergence, there is also the market moving inside the bands. So what do? Now it's time for you to place a buy order. You buy here, you put your stop loss below here, you put your take profits on the middle of the band. This is a scalping strategy, so you're going to be risking a little bit more, but you're going to get a lot of trades. So in this case, you can see that the market moved, it came back down, and then it also started moving to the upside until it may be hitting your take profits very soon right there. Right here you can see the market have finally reached your take profits, and then in this case you will be having taken your profits in 2 trades in a row. Let's go ahead and let me show you the last example so that you can really master this and get this into your brain. So as I said, what are you looking for? The first thing you are looking for is when the market moves outside the bands. Once the market moves outside the bands, you want to see the next thing is divergence. So in this case right here, let's say the market is moving just like this, right? As you can see, we see the market have now moved above the bands right here. Once the market moves above the bands, you are looking, okay, what is the previous highest level, which is this one right here. So the market was moving like this and this and this. So connecting this point and this point is gonna give you a line which looks like this right here, right? So let's just draw the exact line that you would draw in the real market. So in this case, I would draw from this point right here to this point right here. Once I draw from this point right here to this point, I also look at the MACD. Am I seeing the MACD changing direction in this zone right here? As you can see right here, you can see the market is moving to the downside, but on the upper side you can see this is a high but on the downside right here, the momentum have shifted. Now the buyers are no longer in control. So what do? The next thing you look for is the market, that is the candle that closes inside the bands right here, right? So in this case, you can see this candle from this point right here, the candle have closed inside the bands. So what do you do next? What do you do is you place your sell order. So mark out this short position. So this is just for showing you how this works. You can place your orders right here. You put your stop loss above the highest point, and then your take profit should be on the middle of the band right here. So it's gonna look like this as a one-to-one risk to reward trade right here. So once you do this, let's see what happens next. You can see the market now goes all the way, and then at one trade, one candle came in and give you all the profits that you wanted with this trade right here. So this is a simple scalping strategy that you can use in the market, right? Now, I have tested this strategy on many instruments, but I think this strategy works very well with synthetic indices. If you want to start trading synthetic indices, make sure to click the link in the description and join the broker that I use to trade synthetic indices. Things like volatility 75 index, things like step index, Bollinger boom and crash, and you're going to see how to trade those things, because that's the things that I see that gives most of the profits using this strategy that I show with you in this channel. So thank you for watching, and I'm going to see you in the next one.